Okay, so the first thing that I would like to share with you is the Nasdaq composite. So this is a ratio chart, or you can call it a relative strength chart, which I use the S&P 500 as the benchmark. And you can see that this is the IXIC divided by the SPX, so a ratio chart or the relative strength chart. So what I would like you to focus is that that's for the past 20 years or 22 years. So this is a monthly chart. So you can see that monthly chart. And let's just start from the dot-com bubble. So this is the Nasdaq composite divided by the S&P 500. So it's a ratio chart, just bear in mind. And in 2000, and we see that there's a dot-com bubble, the internet bubble, it just burst. And subsequently, we see that there's a sell-off in the Nasdaq, and followed by a very sharp distribution and selling on the way down. So this is like a typical distribution for the TP formation. So once it's like this is a parabolic, and this is a collapse of the parabolic with a TP formation distribution. And once it's done, usually we see a very weak rally and then followed by a continuation to the downside. So this is unlike the traditional textbook style distribution, where we have the phase A, phase B, and then finally we see the upthrust of the distribution followed by a sign of weakness, test, and then the markdown. So this is pretty much selling on the way down, especially this first leg. So this is like the collapse of the parabolic trend and then followed by a test. So this is like a collapse of the whole Wyckoff phases. Like this is a U-test and then followed by the sell-off sign of weakness and all the way into the selling climax. So in around 2001, we see that the ratio chart actually hit the selling climax followed by the automatic rally, secondary test, and then eventually we see that there is a phase C as a test, followed by a sign of strength rally as a confirmation, committed above, and then with a very shallow type of the pullback, so as a backup action. So you can see that this portion right here is quite a classical style of the Wyckoff accumulation, despite it is in a ratio chart. So this technique is still working. And I will say that it works not only from the vertical chart like the typical candlestick chart. I will also show you it also works in a point and figure chart, where I will also share with you the projection target for this chart here, because there is a clearly accumulation structure in the ratio chart. So it's definitely worthwhile to just do a projection as well. But anyway, let me just continue with this chart. So right after this accumulation, there we start a uptrend. So this is pretty much the phase C markup. So we have a like a kind of a absorption type, and then eventually we have a momentum, and eventually it just ends with a speculation. So it's like three phases, different type of the supply absorption. And this is quite a typical textbook style of the end of the trend, because it ends in a buying climax with a climatic run up, where we can see that there is a increasing of the spread, increasing of the velocity as well. So eventually this is kind of like another parabolic type of the run up, despite is not really similar to the previous parabolic run up, but still this is classified as the climatic action with a buying climax, and then followed by a sign of weakness. So this is essentially a change of character. So this change of character is the largest down wave that we have ever seen from 2002 low. So this is the bottom. So this uptrend, and if you just compare all the down wave, down wave, down wave, down wave, down wave, down wave, down wave. So this is by far the largest down wave that we have ever seen. So that's certainly classified as the change of character that essentially stopped the uptrend, at least into a trading range. So this trading range has been going on for about 1 year. So I think it's just 1 year. So this is just around January last year, 2021. And if you take a closer look here, this is kind of like a sign of weakness, or you call it just a change of character. It doesn't really matter. and then followed by a rally. So look at how weak is the rally. So the rally is just formed like kind of a very weak rally, and instead of having like buying climax, automatic rally, secondary test, and then we just pretty much a trading range. Look at this rally; it just can't even overcome maybe this supply zone here. So this is the big bearish bar. It's just kind of halfway. It's just testing halfway of this bar, and then followed by a reversal, and then continuation to the downside. Despite that, it did not really break the low here. It's kind of still testing, and bear in mind that this is still a monthly chart and we are still in January, means that it's still unfolding at the moment. We might see it close below, or we might see it maybe have another attempt to rally, bounce up. So it's still unfolding at the moment. But just by looking at this structure, this kind of the weakness followed by inability to rally up and then reversal is just a bearish chart to me. And bear in mind that we are looking at the ratio chart, so or the relative strength chart. It's actually comparing the Nasdaq composite against the S&P. So this is the high that's actually formed in the dot-com bubble, the 2000. So there's a high actually formed, which actually act as the resistance. So there's an attempt to test the resistance at the buying climax high, and then followed by a reaction. So in short, if I want to interpret this chart, there's only one thing. Means that since 2002, the leadership starting from a Nasdaq composite and then all the way into 2021 here. So it's about to change, because while this chart is in an uptrend like this is uptrend. We have a higher high, higher low, higher high, higher low, higher high, higher low. So this is a very clear uptrend. Means that it's still leading against the S&P 500. So it just takes charge the leadership. So that's why it's kind of like a high beta type of the index, and it's still outperform the S&P. But at the moment, it's kind of losing its leadership. And think about this. This is a 20 years chart or 22 years chart. So if it turns, I'm not sure whether it will just behave like the dot-com bubble. I hope not. And I still can't really imagine we are in this type of the situation, but who knows? But anyway, if this suddenly turned down, and when it's starting to form, this is a high and we have got a lower high here, and we form a lower low. At the moment, we have a low here, but we haven't actually reached another lower low. So technically, we did not really enter into a downtrend. So maybe at best it's a kind of a trading range. But certainly there is a kind of underperformance of the Nasdaq when we compare to the S&P 500. So there's two possibilities. So one is that there is a sector rotation going on. Means that a lot of people, maybe they just sell the Nasdaq stocks and then they just switch into the S&P 500, which is more on the value side, because there are a lot more the value stocks like the banking, finance, and there are some energy stocks. There are also quite a number of the tech stocks which are not doing so well at the moment, because we have already seen that there's underperformance in this chart here. So the second point is that in order for this thing, so this is a ratio IXIC, the Nasdaq divided by SPX. So in order for this chart to go down, we could have this thing to go up or to go down. So if the whole market is under a correction, means that the market is just kind of having a sell-off, all the indices are just take a maybe 5, 10%, 15% sell-off correction, then in that case, if Nasdaq is underperform S&P 500, that will mean that it simply means it will drop more than the S&P. So S&P might drop like if it dropped 10%, then the Nasdaq could drop like 15% or 20%. If the S&P 500 drop like 20%, that's the Nasdaq. If it's underperformed, it could drop like 25, 30%. So it simply means that, so it could be either way, whether it's just some kind of the sector rotation, where we see there's probably flatten, or just this just did not go anywhere, where we got the SPX, the S&P 500 is just kind of going up a bit, and then this is kind of dropping a little, or maybe just maintain horizontal, then this will make the chart looks bearish, keep dropping. So this is how you would interpret this kind of the ratio chart. So in short, Nasdaq, it looks like it's topping at the moment, so hitting the resistance here and having the change of character, inability to rally up, and then looks like it's continue to go down. Okay, so the other thing that I would like to dive in is that whether we have enough fuel in the tank, or in short, it's just like the price projection, the target of the accumulation, because clearly we have accumulation structure here, some strength rally, we got a backup action, we got a markup, and then we have kind of, this is another reaccumulation type of the structure, and then eventually we just have another run up. So I just want to examine whether we have enough fuel in a tank with this kind of the accumulation structure. Okay, so let's just go to the next chart, which is the point and figure. So this is the same chart, but it's just showing in the point and figure chart. So you can just switch it here. So if you're using the trading view, you can just change the chart format. So just now it's using the candlestick, so you can switch it to Renko chart, bar chart. So this is just another type of the chart. It's called a point and figure. Usually I use a point and figure to do the target projection. So first, there are clearly two segments here. So this is the first accumulation structure. And from this first accumulation structure, the price target or the projection is somewhere around 3.5 to 3.75. So you can see that how uncanny it is to have this type of the projection. So when the price actually hit this, it's kind of just reaching the target zone. So this is a zone, and then it just had a reaction. So there's a pullback happening. So the second thing is I use this reaccumulation structure. So there's a original type of the accumulation. This is called a stepping stone reaccumulation structure to do the calculation as well. So from the reaccumulation structure, I got a target is somewhere around 3.45 to 3.65, which is somewhere around here. So this is also a zone or the area. So it actually just matched the first accumulation target. So this is very important. It actually acted as a confirmation count against the original type of the accumulation structure. So this is very much like the target from two of the accumulation structure, and coincides with the previous resistance form in 2000, the dot-com bubble. And the most important part is this. So we see that the price actually retraced. So it actually just react. So I think this is very important. No matter how we calculate or how good we think the analysis is, we need to check the price action, whether you actually respect the resistance or they respect the price target. So in this case, it just hit the price target. It simply means that the fuel inside the tank means that there is a causes build within this accumulation structure has been used up, has been consumed. So in order for more upside for this chart, we simply need to have more causes build. So that is pretty much heavily rely in this reason accumulation, or sorry, the reason trading range. So it could be an accumulation structure, or it could be a distribution, because at the moment I don't really see it break down, so I need to give the benefit of the doubt to both the bull and the bear. I can't really be too biased to one side, but so far from this price the point and figure target, I know that the fuel in the tank has been consumed, so the target has been reached. So I think the best case that we can get from here on is some kind of the trading range. I think that's the best case. So the worst case obviously is just keep continuing to go down to see some weakness, maybe something like this. It might not go all the way back to the lowest point, but if I want to just take a benchmark or take a support, then certainly this green line here could be the support. So once it's break below this immediate support here, so the next support will be somewhere around 2.8. So I mean, this is at the moment is kind of meaningless because this is a ratio chart. It really depends on how S&P 500 will move and also how Nasdaq will move as well. But certainly, this is the ratio between these two. All right. So just bear in mind that if this chart just goes down, go into a downtrend or maybe flat or just forming a lower high and lower low, this type of the typical downtrend, means that Nasdaq actually underperformed the S&P and it actually lost its leadership since 2002. This is like 20 years of the leadership. Okay, so if it turns, that means it will underperform the S&P 500. So it could mean that there is a sector rotation going on, going to the S&P 500, or it could mean that both markets are going down while the Nasdaq actually leads the way down and perform a lot worse than the S&P 500. All right, so this is the chart. So thinking that probably Nasdaq is going to lose its leadership from here on. So just based on this chart alone.